Hey guys, Lauren here from 𝐼𝐴MLRose.com. In this video, I'm going to show you guys a little bit behind the scenes because this is what we do on a weekly basis. So if you want some real group training and see how we do things behind the scenes, take a look at this.
The biggest thing that you want to realize with trading this is that you want those EMAs to get close enough to each other in a motion where you're either going up or down, but you're trading with the trend. So for example, we did this before, and I'm going to pick on somebody again so we know how easy this is. Y'all know some of us trade at different experience levels, but I'm going to call on Jamal because he has a few questions. So Jamal, if you could take yourself off of mute, I'm going to ask you a few questions regarding what the market is doing now. And we're working off of the 4-hour time frame, but I'm going to ask Romero probably to go down to the 30-minute time frame.
All right.
Oh, thanks for putting me on the spot, Rodney.
No problem, brother. So what you're looking for is what's called a death cross, which means there's a sell, or you're looking for a golden cross, which means there's a buy. The death cross means it goes in a downward motion. The EMAs, the red and the blue, the 21 and the 5, they cross each other. And when they cross each other, if you can measure right there underneath your mouth, Romero, right there. When they cross each other right there, that's when you're safe enough to take your trade. So you click there and measure to the bottom of that one, Romero. Now realize you're on the 30-minute time frame. That's your 21 pips. That's 34 pips. Now, if Romero goes to the next spot, which is right to the right underneath the 2, that's the death cross. Where we just left, where Romero was showing you, that's the death cross. Where Romero is highlighting now is the golden cross. That's an upward motion. You see the blue cross over the red. When the blue cross over the red, that's a clear indication of the golden cross. So we're working with a death cross and a golden cross. It gave you the place you put your buy stop. It even gave you the place to take your profit. Your take profit clearly passed the 20 pip mark. When you go back and back test this, you'll see 20 pips all over this chart. My suggestion to you is always choose the strongest pair to trade. So if it's odd USD going up for the trend, go to the 30-minute time frame, look for the buy, allow the candlesticks to paint the EMAs where they cross. You take your trade. You trade it for 20 pips. You move your stop loss into entry. Then you move your stop loss into profit. And if you want to let it ride because you just got it in a great place and you see the indications will tell you, hey, here's your buy stop, here's your take profit, here's your limit, you can go ahead and allow that trade to run. So Jamal, according to this indicator, which pair am I interested in trading that's going in the uptrend, which may be the strongest opportunity for me to take advantage of?
Are we looking at the bottom right hand corner where it says odd GBP, Euro, Chef, and ZD? Is that what we're looking at?
Perfect, you got it.
Okay, so odd USD, odd JPY, GBP, USD, and GJ as well.
So according to what Jamal just said, we just gave him 4 pairs to trade that are all moving in an uptrend. So Jamal, an uptrend tells you should be doing nothing but what?
Buying.
You're looking for buys. So Jamal, according to this indicator, where should you set your buy limits at 70%?
Buy a limit at 70%? Let me see, limit at 1.1092.
That's what Jamal just said is buy limit. Where should you set it at 44%?
Where it says 1.1102.
Where should you set your buy stop?
Buy stop. All right. Buy stop. Oh, where it says buy stop.
Ah.
At 1.119. Is that where it is?
That's perfect. Where should your first take profit be?
Well, let me see. 20 pips, wherever that's going to be.
Perfect. That was a trick question. It's 20 pips. That's our strategy. 20 pips. However, if Jamal chose to ride it all the way to the indicated take profit, where would that indicated take profit be?
Is it where it says 1.1142? Is that up there?
Congratulations, you're a trader.
Man,
Stop it.
Man, you
Stop
sound like a professional trader.
No more question. Like this is math at an absolute finest, and it combines the Elliott waves, moving EMAs, and the Fibonacci. And not only does it combine all three, it gives you more of a confident way to trade. But all you need to see now is your performance. So your confidence goes through the roof, and you say, hey, I'm a trader and I'm lethal at it. But if you go for those 20 pips, you're going to have a lot of success. It tells you the pairs to trade will give you the best opportunity in the marketplace based on how the market is moving based on price action. When you consider these things inside the marketplace, it's hard for even some of your seasoned traders to make that many decisions that fast as Jamal just made those decisions in the span of like 15 to 10 minutes. So all we got to do, while our CP strategy is running, that's great, cool, we'll take it. But what we're going to do is we're going to bring out 20 traders by the end of the week because they took 20 successful trades and they probably lost none because they took them for 20 pips and they moved their stop loss into profit or they moved it into the entry. We need to see a series of blue from trading this week. And you see what you have in front of you. And as the market continues to paint, the only thing you're concerned with doing is making sure you do what the indicator tells you to. So if you say, hey, what pair should I be trading? AUD, USD. Why? Because the rate of AUD is so much stronger than USD. So you have a higher success at trading it. What's the next pair? AJ. What's the next pair? AUD CAD, AUD Chef. But as you see, we get closer and closer, AUD GBP, we're probably going to get some consolidation. AUD Euro, you're probably going to get some consolidation and random movements. You want to take the ones that are so obvious. 10 and -6, it's a clear strength indicator that I'm going to go ahead and trade AUD. This is where you start taking multiple trades, and then you start seeing the potential of what trading has. If you know where to set your buy limits, it's just a waiting game now. That's where you now apply 100% of patience. And you go to sleep, you go do something else with your life that's enjoyable other than trading, and you make the most out of the indicator. Now, the beauty behind it,
it's got to be cheating.
It is. It's a cheat code. You're playing PlayStation 9.
No, it's a blessing. You don't cheat, we reward.
Hey, Rodney.
Yes, sir.
Yeah, I got a quick question for you.
Go ahead.
Okay, so you said the 10 and -6. I heard you mention the AUD/USD, AUD/JPY, GPB, USD, and GJ. But what were you saying about the -6? And you were kind of mixing some pairs up. I wasn't sure what you were getting at.
The -6 indicated that's the weakest pair in the market.
I see.
So it could be -20. And you want the strongest pair in the market versus the weakest pair in the market. So if I saw -20 on USD and a +10 on AUD, I'm trading AUD USD. And I'm trading it for what? The buy. I want that negative to be the one I trade against. I don't want to necessarily trade AUD GBP because that's a 7 and a 10 and they close. And that 7 can easily change to 10. And then all of a sudden I'm in consolidation.
Got it.
But if that 10 is so strong and it's a -6, that's a big margin. That's showing me a lot of buying power in one particular pair, and I can depend on it. All I gotta do is be patient enough to wait for those lines to cross and this doggone indicator to paint where I should put my limits and take my buy stops. And I have to be patient and wait for the market just to come to me.
Awesome.
And so when we create this many more leaders by using this indicator, you can now train your own teams and grow and grow and grow and be confident in what you're doing. So other than that, that's as simple as that indicator gets. It's not going to be hard to use. It's not going to be difficult to use it. You just have to use it. And so when we use it, we have to realize we're using it for the purpose of analytical data. We need to gather a lot of it. So if you have to start your own Excel sheet or look in your account and see how many trades you're taking, simply take a screenshot. I challenge you to open up the trade so the numbers can show that you're gaining 20 pips every time. And if you don't know how to do it in your phone, you just tap on the trade in your history and it shows where you entered the trade, where you ended the trade, what your take profit was. And if you show 20 trades, didn't take profit, they're going to ask you what you're doing. Some people jump in the trade and hit the X button and they just get out the trade on that profit. But some people can predict where the market is going and they're strategically making a decision to exit the market right on time.
Okay, so I know you guys see how easy it is. It's not hard at all. If you have the right mentorship and the right guidance, you can learn how to trade. So if you're ready to get started, go ahead and click the link in the description. And if you have any questions, my email will also be in the description below. And I hope to see you guys at the top because the bottom is way too crowded.